afternoon and welcome to another episode of the Moving Markets Podcast. I am Jeffrey Dunyan, your host for this episode. As with all episodes, I am the owner and founder of Safe Option Strategies. Make sure you take some time to check out our website at sostrades.com. We're going to talk a little bit about what happened in the market today. Kind of a flat day. There's a couple of stocks that are worth mentioning and worth talking about, but in terms of what the overall market indexes did, NASDAQ up a little bit, S&P up a little bit, Dow down a little bit. No dramatic movement in any of the three major indexes that we follow, but there's a couple things coming up for the rest of this week that could possibly move things a little bit in one direction or another. I'm still voting mostly for a flat to maybe slightly bearish week. A lot's going to depend on that PCE report on Thursday morning, but we'll talk about that and some other things. Enjoy today's presentation. Make sure you take some time to check us out at sostrades.com. Thanks. Good afternoon, everybody. Welcome to Moving Markets Podcast. I am Jeffrey Dunyan. It is February the 27th, 2024, Tuesday. The U.S. markets have been closed for just about 35 minutes at the time we're doing this recording today and doing this podcast. Maybe another half an hour after that you're actually seeing this online. This is going to be an awfully short podcast, and I thought today we might have something a little bit longer than we had yesterday. It's going to be kind of short because honestly, there's just not that much going on, and the markets were reflective of that. You can, if you look over here on the right, for those of you that are watching video instead of just listening to the podcast via audio, you can see the Dow Jones Industrial Average finished down 96.82. That's 0.25%. The NASDAQ was up a little over 1/3%, up 59 points. The S&P up a little over 8.5 points, 0.17%. That's really not that much for a single day movement. It's nice that the S&P still has some legs, that it's still moving up a little bit. The trend and the overall pattern has not changed very much on the S&P in spite of, it seems like we're getting about 2 out of every 5 days recently has been a little bit of a pullback. But then those 3 out of 5 days that are pushing forward are pushing forward dramatically enough that the trend is still relatively straight, not straight up, but kind of on the same pattern of upward movement. If you're looking at the chart that I've got up right now, the 20-day moving average really tells the story. That 5-day is back and forth a little bit, but the 20-day is just on a fairly regular, I would call it about a 45-degree angle to the upside if you're trying to create a little bit of a visual, and that's good, steady movement to the upside. The Dow Jones Industrial Average, it's had, it's made up of only 30 stocks, so same general trend, same general pattern, but today's, second day in a row of sell-off and maybe even down a little bit over the last 3 days, but not anything to really be concerned or worried about. The NASDAQ composite, same story. The 5-day patterns, the 5-day moving averages look a little bit different on these 3 different indexes, but if you look at the 20-day moving average on any of these, you've got about a month and a half where it is just very steady, very, very unchanged in terms of the 20-day moving average. I do think we're at a little bit of a tipping point where you may see some flattening and maybe a little bit of pullback. I'm still of the opinion that a 10% correction from where we're at right now would actually be a very good thing for these markets. And I kind of hope that we get that, to be honest with you. I like it when the markets are more bullish than bearish, but a 10% correction right now would, I think, be a very positive thing. There's not a lot in the way of headlines today. You've got, I believe it was Zoom reported last night after the market closed, and they had a nice move to the upside today, 8% up, $5. That's not something that was not impactful. That's a good, solid move up for Zoom. I think coming up in the way of other earnings reports, there's not a lot that are going to be real earth-shattering coming up. We do have Baidu coming up, and I sent out a new trade for Baidu that did not get filled. We have Salesforce, which is CRM, coming up, I believe, tomorrow after the market closes. Those are really the only companies that I'm paying close attention to over the rest of this week. I don't I don't see a lot more than that going on. CrowdStrike, I know a lot of people follow CrowdStrike. They're still about a week out on their week and a day on their earnings report. I think the bigger news for this week is going to be what happens tomorrow with the GDP. There is a kind of a consensus that both that the with the numbers coming in now, this is the second read of the GMP, so this is the consensus second estimate. So we're still looking at numbers from the fourth quarter of last year, and the prior rate was 3.3 in terms of GDP growth. That's kind of what is expected to come on this second reading. I don't have any reason to believe it's going to be dramatically above or below that. If it's a tenth of a point above or a tenth of a point below, I don't think you're going to see any effect on the market. Same thing with personal consumption. If there was something really out of the ordinary, something really crazy and wild that was way off of what that consensus estimate is, you could possibly see a move in the markets that would be a little bit bigger. The real report that everyone should be looking at is going to be Thursday morning. So we still have a day. This is the year over year and the month over month personal consumption expenditures and the core PCE price index. Some people claim that this is the one the Fed looks at most closely. Others would tell you that it's the CPI that the Fed looks at most closely. What I find curious in the expectation for that report on Thursday morning is that the month over month personal income is expected to go up just 0.1% from the prior month. Personal consumption is expected to drop from a 0.7 to a 0.2 month over month. That means income going up, spending going down a little bit. I think those are out of sorts with each other. I'm expecting personal consumption expenditures to, I think that estimate will probably be correct. I don't think personal income is going to be up as much as what is suggested. The pricing index and the core pricing index, the expectation is that month over month, the regular price index and the core price index are each going to tick up just a little bit, but year over year, the expectation is that they're going to be down just a little bit. And just like we saw happen a couple weeks ago with CPI and PPI, if those numbers come in a little bit hotter than expected, you're going to see this market sell off. It's going to be further evidence that the likelihood of rate cuts is still a ways down the road. It's going to be further evidence of a weakening economy, no matter what the mainstream press is trying to sell, and no matter what the White House is trying to spin with the numbers that come out in these reports. Inflation might be picking back up a little bit. I found it really interesting, and I have not read this article, but if you look here, the third article down in the middle of the page here says Wall Street firm issues dire warning over possible stagflation crisis. And then the bigger headline is JP Morgan warns investors they should brace for a 1970s style stagflation. Here's what I find curious about that.
Is it possible to count on my internet? Like my customers count on me?
With reliable internet from Comcast Business?
Pause that so we don't get that audio back. What I find curious about that is I don't know if there are, other than the few myopic people who buy every piece of nonsense and every piece of garbage that comes out of the White House and the current administration. And there are those people out there. They just believe it without any evidence of what's being said. Tell a lie often enough and people will believe it. And that's the philosophy of this current administration. I believe that firmly. But other than those handful of people that buy into the notion that everything is rosy and everything is great, and it's just a matter of messaging that people should be feeling better about their wallet and about their economy, and they're simply not because the messaging isn't working. I mean, that's just complete and total BS. But what this article is saying is what we have known now for at least a year. This reminds me of how long it took for people to figure out that inflation was not transitory. For a full year, maybe a year and a half, you heard the White House, you heard Jerome Powell, you heard other people say that inflation was just a transitory thing, and after a year and a half, they finally realized the lie wasn't selling, and it was a lie from day one. From day one, I absolutely unequivocally believe that they knew inflation was not just a transitory thing. That was one of the biggest lies that they've tried to perpetrate on the public in this country. But it feels a little bit the same to me. This notion that now they're saying, "Watch out, we might have a little stagflation." Well, I think most people have known that for the last 6 months to a year. That the likelihood is inflation is still not going away anytime soon. To me, this is kind of a furthering of the narrative that it's not transitory, and it never was, and it's still not having a strong end in sight. So interesting that that's the headline. That's the article coming out of J.P. Morgan. Um, Other than that, there's not a lot going on that's not overtly political. I sometimes get off on the political stuff. I'm not going to do that today. I probably already have just a little bit, but it's just kind of a blasé day today. And I think like I said this earlier, barring a really massive difference in the expected GDP numbers and the numbers that actually come out, I think you're going to see more of the same tomorrow, a fairly flat market in the three indexes, and then watch Thursday and Friday for some pretty big movement. And I suspect that movement is going to be to the downside because I do believe those PCE numbers are going to be higher than what the expectation is. So as far as for Safe Option Strategies members of the program, no adjustments that need to be made right now today. A couple of our collar trades could see adjustments coming within the next few days. Our spread trades are all looking fantastic. Everything is lining up the way we want it to. We're off to a phenomenal start this year. I'm excited to just keep that run going. But no adjustments for tomorrow morning, so kind of an easy night. I'm going to wrap up right there. Have a great rest of your Tuesday, everyone. We'll see you back tomorrow at the close of the market, and we'll talk a little bit more about what the actual GDP numbers were and what impact that might have going through the rest of this week and into the next couple of weeks. Thanks. Bye-bye.